Folks, let's talk about a straightforward path to financial freedom: dividend stocks. When you own these stocks, you own a piece of a company that pays you a little something for being a part owner. It's like getting a small piece of their profits delivered right to your pocket year after year. The beauty of dividend stocks is twofold: regular income and potential growth. It's like a paycheck from your investments, whether the market's up or down. A mistake I see people make is getting too caught up in chasing the highest yield right now. Look at the company behind the dividend. Is it built to last, with the potential to increase payouts over time? Remember, it's about building a strong foundation for the long term. Now, let's talk about a company called POSCO Holdings. They're a major player in the steel industry and they've been around for a good while. POSCO has a knack for delivering solid dividends. They're the dominant force in the South Korean market, and their size gives them an edge. The world still needs steel, my friends. It's the backbone of construction and infrastructure. POSCO's management is conservative, understands the importance of a strong balance sheet, and is committed to rewarding shareholders. You want companies in your portfolio that think long-term, and that's what you get with POSCO. Next up, we have Jefferies Financial Group. They're in the financial services game, and it's a business I understand quite well. Jefferies has been quietly growing their dividend, and I think they have room to keep growing it. They're known for their investment banking and capital markets expertise. The financial sector can be volatile, but Jefferies has shown an ability to adapt and thrive. That's the kind of experience you want on your side. Let's talk about Viatris. They're in the generic drug business, a space with a lot of potential for steady income. People always need medicine, and Viatris provides a more affordable option with their generic drugs. Viatris has scale on their side, giving them some pricing power. What catches my eye with Viatris is their commitment to that dividend. If you're looking for a stock that could provide some stability to your portfolio, Viatris is worth a closer look. Now, let's talk about Ares Capital. They're in the business of lending money, specifically to middle market companies. Ares Capital comes with a higher dividend yield, and that's attractive to a lot of folks. But remember, higher yields often come with higher risk. Ares Capital knows how to manage that risk with a team of experienced credit analysts. They're also diversified across different industries, which helps spread the risk around. Let's shift gears and talk about Ally Financial. They're an online bank and they've been making a name for themselves in the auto lending business. Ally has adapted well to the digital age with a focus on customer service. Ally has been steadily increasing their dividend in recent years, and I think there's room for continued growth. They've got a solid business model, generating strong cash flow, and are committed to returning value to shareholders. That's a combination I like to see. Now let's talk about CAG Group. They're a large bank and they've been a steady Eddie in the financial world. CAG Group has a long history of dividend growth and conservative management. In the banking business, it's all about managing risk and generating consistent earnings. CAG Group has weathered the storms of the financial world and come out stronger. They've been paying a dividend for decades, consistently increasing it over time. Let's move on to a company that's close to everyone's heart, or should I say stomach. Kroger. They're one of the largest grocery chains in the country, and they've been a reliable dividend payer for years. Kroger has a long history of increasing their dividend, and I think they're well positioned to continue doing so. They've got a strong brand, a loyal customer base, and a management team focused on long-term growth. Last, but certainly not least, we have Costco. They're the kings and queens of bulk buying, and their business model is one I admire. Costco has a solid track record of dividend growth, and I expect that to continue. They're a well-managed company with a strong balance sheet and a bright future. So, there you have it, folks. 8 companies, each with their own strengths and potential for delivering those growing dividends year after year. Building a successful portfolio isn't about chasing the latest fads or trying to time the market. It's about finding solid companies with a history of profitability and a commitment to their shareholders. Dividend-paying stocks can be a cornerstone of that kind of portfolio, providing steady income and peace of mind. Remember, investing is a marathon, not a sprint. Make smart, informed decisions that will benefit you for years to come.